It's that time of year again where we get to take a pause and review the rollercoaster of a ride that 2023 has been. And I think it's fair to say that it turned out very differently from what everyone expected. Just 12 months ago, I made this video going over my predictions for the year, where I also looked at what you thought, and we're going to do exactly the same thing in this video. Except now, we also get to look back and see if any of you guys were right, or just as bad at making predictions as Robert Kiyosaki is at calling a stock market crash 6 times every year.
Yeah.
Fake.
As per last year, I've just run 4 community polls here on YouTube covering these 4 key predictions. Firstly, what the S&P 500 will end up by the end of 2024. Secondly, what the FTSE 100 will finally close next year on, how interest rates will fare, and then finally, what house prices will do here in the UK. So first up, let's tackle interest rates. This has been a pretty incredible ride this year, both here in the UK and over in the US, with central banks raising interest rates at their fastest pace ever. Current interest rates at the moment are 5.5% in the US and 5.25% here in the UK. Most recently, those rates have been held in their current place by the respective central banks, with the general consensus being that these are about as high as they'll go for now, with no signs of a cut anytime soon. Just as a reminder, interest rates set by these central banks are one of the most powerful levers they have in trying to control inflation, which has been running rampant across the world for a couple of years. By increasing the interest rate, a couple of things happen. Firstly, it becomes more expensive to borrow money, which sounds obvious, but what this does is make people like you and me, and businesses, think twice before we take out a big loan or even a mortgage, as our cost to repay that debt are now a lot more expensive than they were before. By doing this and increasing those costs, central banks pretty much reduce the amount of money that flows into the economy, and this should help reduce costs, as less money floating around should mean lower pricing. And then also, the second effect is that rates for savers and those people looking to earn some money goes up. So you might have seen that a huge amount of money has been flowing into things like money market funds, which are just a collection of bonds and short-term debts. With high interest rates, these funds have been giving savers much higher returns with almost no risk, and over $1 trillion worth of cash has made its way into these funds. The same applies with savings rates on ISAs and other savings accounts that you might have seen. With attractive rates, you're more likely to save your money than spend it in the economy, so again, less money flows around and prices should come down to ease inflation. At least, that's the theory anyway. Now, on to what you all predicted this year before a quick review of the year before. So here's the results. Now, most of you, currently almost half, actually expect some small cuts to take place by the end of 2024, with a rate of around 4.5 to 4.75% to close out the year. Then, around a third of you actually expect rates to remain the same as they are now. And finally, a few of you are leaning to the extremes, and who knows, you could be way too pessimistic or optimistic, but let's review this in 12 months. For some perspective, the markets are betting on something similar. So if I grab the latest implied rates here from Bloomberg, the smart money reckons a rate of around 4.75% by November next year, with cuts starting in the summertime. Compare this to last year's predictions to see how you all did. Here's a clip from a video 12 months ago. The majority of you, 53% of everyone who voted, reckons that interest rates will be between 3.5% and 4.5%, so around 30% higher than they are right now and up to another 150 basis points on top of 3%. Safe to say we were all quite far off there, and my terrible prediction of just a 4% rate being the highest we will see was nowhere near today's reality. The only thing I'd say was accurate was that higher rates are definitely here to stay, and we aren't going to go back to the days of 1% for the foreseeable future. But hey, for my prediction for this year, I'm going to say with a crowd here and say that for 2024, interest rates in the UK will probably be around that 4.75% mark, as inflation will be pretty sticky and there will be lots of mortgage pain felt as we head through the year. Okay, next one. Let's look at everyone's favourite topic here on YouTube, house prices. Nothing gets people going like saying there's going to be a house price crash on YouTube. In fact, people make a living pumping out the same video every week saying the same thing. Amazing really, but people still click and watch the videos. What can I say? Now, it's been an interesting year in the housing market, and the crash of 2023 hasn't quite panned out as expected. But don't worry, they'll just keep kicking the can down the road, and the crash will now take place in 2024 apparently. So this topic has all kinds of data on it, and everyone likes to fight about what source is best, but let me just give you a quick overview anyway.
Yeah.
Fake.
So in general, here's where prices look to be. Nationwide have prices around 2% down over the year. They were around 5% down for the past couple of months, which is due to the bigger gains earlier in the year. And then it's a similar story from the likes of Halifax as well. They have an annual drop of 3.2%, taking their average UK home down to £281,974. Now, a couple of things to add here, I think, and this part gets glossed over quite a lot. but pricing on its own is a useless metric unless you factor in a very key point, inflation. So it's all fine saying that house prices have fallen by around 3% this year, but in real terms, once you take into account inflation and you add that part back on, you actually get to a more realistic number. So have a look here on this real house price graph, which does exactly that using Nationwide's data. If we look at the latest data we have when making this video, it says house prices at this point in the year are £261,181. Now this left column shows us the price without inflation, and then this second column is what they call the real price, which takes inflation into account. If we compare the prices from the same quarter of last year, we get to see two different numbers. So firstly, the raw price drop is from £273,135, and this would give us a drop of 4.5% for the year. Now this lines up with what most of the data says from the sources that we have access to. Now what about the real price? Now in this column, we've gone from 297,717, meaning that the fall is slightly larger, and this works out to be about a 12% drop. So a 4.5% drop in prices and a 12% fall in real terms. I guess you could say that in 2023, house prices in the UK went through a bit of a correction, but a crash, I think that's pushing it a bit too far. Now, what did you all think was going to happen moving forward? Here's your results on screen now. Most of you here at 44% reckon that house prices stay around the same number, but with a key point that they will fall in real terms as inflation eats into their pricing. Now, personally, I'd go along with this and have a similar view that we're not going to see this amazing sudden crash, and prices will probably be flat on average, but will lose money in real terms. But saying this, a quarter of you seem to be pretty bullish, with almost 25% thinking that we're going to see prices go up between 5 and 10%, which will continue the UK property market boom. As always, when I make a property market update video, it's so hard to talk average UK houses and generally UK averages when every market is different and each has its own unique challenges. Some areas will always remain desirable places to live and might feel immune from any falls, while other places can change pretty quickly. And then also, most people shouldn't care what the house price market does unless they're actually buying or selling. It's like sitting watching the stock market, feeling happy if it goes up and sad and goes down or whatever, even if you weren't planning on buying or selling anything. On the bearish side though, we do have a major catalyst coming this year as more people move off from very cheap low interest rate mortgages to much higher ones. This is because the interest rate rises that we mentioned earlier haven't yet filtered through to most people's mortgages. If you're now paying only 2% on your mortgage, but have to remortgage in 2024, then it's likely you'll end up paying something like 5.5%, which could have a major impact on your monthly costs. These are estimated to be around £200 to £300 for the average household. However, the big caveat is that once we get around to the summer and beyond, if the Bank of England start to cut rates, then this will have less of an impact than people think. A very tough call for this year ahead. Now, how did you all do last year? Well, here's another clip from the video 12 months ago. Now, as you can see, the majority of you are quite pessimistic and are going for either a correction of 5 to 8%, or a whopping quarter of you are going for a worst case scenario of anything from 10%, 20%, or even worse. So looks like you actually got this one right. Pat on the back, and let's move on to the next topic, the good old FTSE 100. The UK has had a tough year, I think it's fair to say, and we've managed to just about avoid an official recession. Growth remains stubbornly low, inflation is being very sticky, and most people would have been lucky to get a pay rise. I really don't think there's a lot of positive things to say at the moment from a UK standpoint for investors, but hey, that kind of sentiment could be the reason why you take the opposite view. Now, just before we look at what you predicted for the FTSE 100, it's always worth saying that this market really doesn't represent the UK very well, as it's really a collection of global companies that generates most of its income from outside of the UK. So, although they might employ a lot of people here and pay their taxes here, a strong FTSE 100 does not mean a strong UK economy, but I guess it's more of a benchmark for how well large multinationals are doing who pay pretty high dividends. Okay, so let's check out these results from the community post. Most of you here think that the FTSE 100 will stay around the same between 7,400 and 7,600 points, with then an equal split saying a small decline or a small increase. Fair to say that anything can happen here. This is pretty even looking response. Just for reference, the current FTSE 100 index sits at just under 7,500 at the time of recording this video, but in February of this year, it did hit a new high of over 8,000 points. I think that was a reflection of lots of money moving into safer dividend stocks compared to the likes of the US stock market, which was still struggling earlier in the year before it really started to get going. Now, just one more thing to note on the FTSE 100, because this index does pay a high dividend. you do have to factor in total returns and not just look at that number. So although for the year so far the index is down about 1%, in total returns, once you add back in those dividends, you do have an increase of just under 3%. Still, nothing to write home about, at least when you compare it to the likes of the S&P 500, which has seen itself have a great year with a rise of almost 21% in total returns. Looking back on our last year's predictions, 34% of you did call it correctly with the index staying flat, but that did mean that the majority of you missed out completely, and quite a few of you, including me, were way too optimistic. I even said a 5% increase myself, and I tried to justify it like this. So for me, I'll go with a little bump as well. I think we'll probably see investors still be a little fearful of the growth stocks and hype stocks from the last couple of years, and stocks that pay dividends and generate real cash flow will be right at the top of people's minds as they look to grow their portfolio and keep their money safe. Oh, how wrong I was. So for this year, my prediction should be taken with just as much credibility as the last one. So why not roll the dice again and go for a 5% bump in the price index? It's going to happen at least once, right? Okay, let's tackle the final prediction now, the S&P 500, the ultimate market that any investor aims to beat and the biggest and best companies that the US stock market has to offer. The S&P 500 has had a pretty good year that almost nobody saw coming, with forecasts of recessions and huge pullbacks in pricing. After the first couple of months, the market took on a huge rally through the summer, and then it's been on a few steady winning streaks since then and will probably finish the year up over 20%. Now, what's been really interesting this year is that these gains in the market have come from just a few companies having great years. You might have come across the Magnificent Seven, which is Apple, Amazon, Alphabet, Meta, Microsoft, Nvidia, and Tesla. Now, without their gains in the performance this year, you would have been pretty much flat and not done very well, which should be a reminder of just how hard it is to pick stocks. Also, if we look to see how many companies in the S&P 500 actually managed to return 21% or more for the year, it's only around 133 stocks, or around 26%, which I hope, again, should remind you that you'll be much better off if you buy the whole market than trying to be Warren Buffett. Anyway, let's have a look at some predictions and see how we're looking for the year ahead. 45% of you think we're going to have another little rise up this year in line with the long-term average, so somewhere between 4,800 and 5,100 points. Now, just for reference, the current market is around 4,600 points, so that would be anywhere up to a 10% rise. Then, in second place, the next group of you reckon will finish the year around the same, and I imagine that many of you are thinking that because we've had such a good year this year, there's no way the market can continue to rally and keep going higher, but only time will tell. Then finally, 18% of you do think that things will be heading low, but to counter that, a brave 10% of you think we're going to the moon with 5,100 points and above. Save me some space on your rocket and don't forget to put your seatbelts on. Now, I'm going to stay on the cautious side this year and also keep in that middle range, calling it that will stay the same, or if not, just rise a very small amount. Although there's still a lot to be bullish on and everyone's talking about AI and automation, I think we've still got a very, very long way to go. However, as a long-term investor, I think anytime the market stays the same or goes lower, this is a great buying opportunity, as all I want is a long-term lower price on my average. So before you wish for a bull market rally, just consider that if you are in this for the long run, then actually what you want is the opposite. Just some food for thought. Now, to wrap things up, how did you guys get on last year when making this prediction? How many of you thought that the market would rally 20% from the depths of 2022 and end 2023 on a high? The answer, only 6% of you voted last year that the market would finish above 4,400 points, and most people thought it would actually stay the same or just rise a little bit. And yours truly here also thought the same thing, with my crazy price target of 4,355 points forever burned into YouTube history for everyone to see. You can see the pain in my face here as I realise that in 12 months' time I'm going to be very wrong. Now, what about moving forward? I think just for fun I should put out another prediction just as specific, because at least one year maybe I'll have it right. So I'll say that the S&P 500 finishes 2024 at a price of 4,788 points. A wild ride ending with a small rise up, but plenty of pain thrown in for good measure. As always, let me know what you think in the comments below. Is this the wisdom of the crowds, or do all of us have no idea what we're talking about? And on that note, just remember, if it wasn't clear enough already, making predictions about the future and getting them right is one thing, but letting that change the way you invest is just crazy, especially in the short term. Keep with your own plans, enjoy the ride, and here's to a successful 2024 for all of us. Now, if you're interested, I'll leave last year's video for you to enjoy here in full, but otherwise I'll see you in the next video, and as always, happy investing.